All right. So I just wanted to thank everyone for coming in this morning to our presentation. My name is Ryan. As a lot of you guys know, I work with CACCWA here, and I am spearheading this project as a program coordinator. Today we're going to be talking about a number of different things. So we're going to be talking about credit management, what credit is, and also getting approved for a loan. The 5 C's of credit. The first one is character, kind of your history and your payment history and how reliable you are as a person to make your payments. Capacity and cash flow is the second one, the second C of the 5. Um, Cash flow is and capacity is essentially the money that you have to be able to pay back the loan. So uh, essentially, this is based on financial statements. Usually, the last 2 years and the current year is what you're really wanting to show them if you have the money and the funds to be able to pay back what you say you can pay and whether or not you have a business plan. We've talked about business plan in a previous module, and I can send that to you later. It also, this capacity and cash flow also includes the estimates. So your estimates and projections about how much money you will make in revenue, and how much money you'll need to spend. So kind of like, expenses and stuff, right? Collateral is the third C. Collateral is something of value that you own or you will buy with money from the loan that you can pledge to secure a loan. Most lenders they require a business owner to personally guarantee the loan, a promise to pay. So that means that even if you don't have the cash, that there is something else that they can take that's kind of collateral. And then capital and contributions as the business net worth. So what the business owns in assets minus their liabilities, what they owe. So that's capital and contribution in a nutshell. But the last one is condition. So loan conditions that a lender considers when approving your loan. So the amount, the interest rate, what you'll use for the loan for. So if you're going to be buying like equipment, inventory, stuff for the business, stuff like that. So that's kind of all included in the condition there. The FICO score, how much money you owe compared to how much money you make, how much money you owe on personal and business loans, and other credit factors, had to file bankruptcy, those kinds of things. You can see the graphic over to the right here talks about the percentages and how much it actually counts into the score. So how much you owe is a big chunk of how it affects your credit. So if you owe a lot of money, if your utilization is pretty high, uh, then it's going to have a big impact on your credit score. It's going to have a negative impact. And also your payment history. If you're new credit, someone you're just establishing credit, you're also don't have a lot of history. So they can't really tell how reputable you are with your money. That 15% in there is the length of the credit history too. So payment history, length of the credit history, new credit, all these kinds of things kind of matter. You can get annual credit reports for free every single year, and it's important that you do that annually to review. But also how many times you inquire with your credit. That's a hard inquiry. It can also affect your credit. So try not to check your credit too often. But going to our next slide, something I wanted to point out here is if you notice a mistake in your credit reporting, if you notice that your credit went down, you're like, I didn't use my credit card at all. I've noticed times where there's interest charged to my credit card and it dinged my score down. And I'm like, what the heck? I put that card away. I haven't used it. This is when I was, still it's always going to be an ongoing thing, maintaining your credit. So you can actually mitigate that process. You can dispute it. So you want to contact the creditor and ask for the report to be fixed if you notice that something is indeed incorrect. So look for mistakes in your credit report. Don't just look at it and go, oh, that's the number. That's the way it goes. Contact the credit bureau in writing. So if you can write to them, that's going to be a really good way to help correct it. It shows initiative and cite specifically what is incorrect. All 3 credit bureaus accept disputes, also online. So if you can do that online, that's most people do that online. So nowadays that's the kind of golden standard. And make sure you provide copies of your letters to your lenders. So you want to make sure that you have that backed up somewhere. And that was in a previous slide about backing up your data, the 3-2-1 rule. If you missed that presentation, I can always send it to you guys. It's about records keeping, and it's really, really important. The last thing is to make sure that you try to do this stuff before applying for a loan. If you have these little credit dings, and you were just a few points shy of maybe that threshold of being, hey, we maybe would have approved you if you had another 5 points. We look for, 675 credit score. We look for 700. Every place is a little bit different depending on where you live and the kind of business you have and the industry you're going into. So, but it's important that you try to get these things fixed as soon as you can. So kind of what we talked about a little bit earlier is if you have a low credit score, make sure things that you can do to help affect it and, get it going where you need it to be. If you have any of these scores, like a 300 to a 579, that's considered very poor. You guys can see, the graphic over here on the right side and the color that's coordinated with bad to good, or commonly, that kind of spectrum. But 5 things you can do here: pay your bills on time. That's an obvious one. Make sure you're setting reminders, have auto payments in your credit line or in your credit card that's scheduled for. You can schedule for a minimum payment. I'm the kind of person that likes to just try to get it, settled and taken care of, and making sure your credit utilization is under 30%. Oops, excuse me. Under 30%. I just clicked in the next slide. Um, so to my point earlier in the slide, make sure it's under 30%. Monitor annually. These are just kind of reiterations. Don't open new credit sources unless you absolutely need to. And then make sure you're having a mixture of different kinds of credits. That also helps too. That's something that a lot of people don't know, is if you have a kind of mixture of different credits, it demonstrates that your versatility and your ability to pay back your debt. This is probably our last slide on credit. It's one of the things that not a lot of people are aware of. The DUNS number is a unique number that's assigned to each business. It's kind of similar to Social Security number for individuals. It's easy for data tracking for businesses to check your viability as a business. You can get supplier information. There's lots of stuff available to you as a resource once you register your business through Dun & Bradstreet. And you can see how lenders look at your business. So Dun & Bradstreet is a really great way for you to monitor how, through the lender's eye, what they're seeing your business look like. And they gather information from all, public records, company filings, credit reports, business interactions, all those things. And so a DUNS number, every business that's registered and does business will have a DUNS number, whether or not you know it. So I want you to, you can click on the DUNS number tool below, and you can actually check your business and see what the DUNS number is, and you can get that registered and start to make yourself, do that a little bit of introspection where you look at, what the lender's seeing on their end, and then you go, man, what do I need to do better to make me look better and a little bit more reliable as a business. All right, so that concludes our credit section. Does anyone have any immediate questions about credit reporting, all that stuff? I know there's a lot of information there, spray fire. So I'm happy to.
I have a question.
Mhm.
So this credit, is it your personal credit or is it a business credit?
That's a great question. So it's once you open a business and you register it under your name, your name is, if you are, that actually is a great question. So if you are like a sole proprietor, this gets into how your business is registered as well. And if there's a bank account tied to you, this is important for you as a business owner to make sure that you're banking. You have two separate accounts. So your private account for your banking shouldn't be your business account. If that's how you're doing it, you might be running into issues there. But yeah, so this is the DUNS. So the DUNS number that has to do with your business. It doesn't have to do with your personal information. When it comes to personal credit, FICO score, and that kind of stuff, that's kind of that's it for individuals as well. So establishing credit as an individual, and then for businesses, if you're looking to take out a business loan, they look at you as an individual or your constituents, the business shareholders, whoever's going to be going into business with you. Those 5 C's of credit, they're going to look at capital, if you have money, they're going to look at collateral, character, all those things of all the people that are involved in getting that
Yeah.
business loan approved.
Sorry, I don't mean to. So, in addition to that, so, say you don't have good personal credit, right?
Mm-hmm.
And you're working on it, but
Mm-hmm.
I know, and this is where I get mixed conflict information. I get you can get your EIN number and use that as your business, kind of like your business social security number, if you will.
Right.
Right. And so
Mm-hmm.
how I know there's not, you can get a credit card, right?
Right.
Using your personal information, but how do you know which companies use your EIN versus your personal
Mm.
information? How do you find that, or who do you go to, or how does that work? Because not a lot of companies, like, they just ask for your personal information, right? Your
Right.
personal social. But
Mm-hmm.
say you don't want to use your social and your personal information, you just want to use your business information.
Right.
I think your questions, if I understand you correctly, is when to use the EIN, UBI, and then Social Security. So UBI, when you do business, you go to the state of Washington, you apply for a number, and Washington has its own number systems called UBI, and the ENI is essentially is to individual, like a
Mm-hmm.
self-employed person. Most of the time they don't have a company name. Their company name is their own name, so they can
Oh,
choose. They can choose to use the social security number as their EIN. Okay, if I and
okay.
that's and but if you apply for a corporation, you run like a business. You have your own. The business has its own EIN under some name like the Truth Social or some just uh, Dunkin' Donut or something. So they apply for that number, and they go through the process at the state level, at the city level, wherever the license are required. Uh, and you can file tax based on just doing business,
Mm-hmm.
which
Okay.
is that number. It's a corporation, it's a company applying for it. But as far as the loan is concerned, when the business is you have one or two principals only, or three principals the most. They also look at the company. They run a DNB, which is called Dun and Bradstreet. They run a DNB, but they also run. They want to know the directors who has such a great stakes in the company. They wanted to know, so they also look for their personal profile, financial profile also. So that's
Okay.
yeah, and
Yes,
and
thank you.
yeah, okay. Hope that answers your question.
Yes, yes, thank you so much. I appreciate it.
Thank you, Boo.
I was gonna
He's
say, can I say something
yeah.
about the EIN situation? Is
Mm-hmm.
I've the experience has been they because the we're just talking about the 5 C's of credit, that collateral, they like the banks need something. So even if your business has some like if your business is like established, then they can still use your business. But if you're like if it's just your sole proprietor type thing, then they need some sort of collateral, so they have to look at your personal stuff, right? So that's to answer your question, Susanna, like
Yes.
that's why they look at it, is because they're like, well, if your business is new, you have literally nothing to offer them in that moment. And so they're like, okay, cool, we have to see the personal credit profile. And then if it's not very
Okay.
good right now, it will be detrimental to trying to get like a business credit card from your business
I
account. Um,
okay. Yeah, that makes sense. Thank you so much.
yeah.
We're going to go into the loan module now. And this is talking about the business plan. So if you don't have a business plan, it's going to be difficult for you to get approved for a loan. Business plan, it outlines essentially your vision and your mission, and it talks about in there a financial plan as well, projections and stuff we've talked about earlier. So if you don't have a business plan and you go in to apply for a loan, the bank's going to go, well, why should I give you money if you just go all, based on my hopes and dreams? And then they're going to be like, well, you don't really have a plan. Why should I give you money? All the things we've talked about before with, uh, being credible and reputable and looking like you have money and everything organized so that you can actually pay them back. So it's important that you do develop a business plan. And if you don't have a business plan or know where to start with one, there's a template right here. You guys can follow it. It's through the SBA. And so you can click on there, download it, and use that as framework to develop your business plan. We've covered this one in a previous presentation as well. So if you'd like that information, I can forward you that information. But the main bullet points here is that, like we talked about before, it identifies and defines your target market. The plan helps plan and anticipate future capital needs, demonstrates how you will make money, tells the story of your business and others, including potential lenders. So it spells out who, how, and why you need this money and how you're going to make it happen, and why you as a business owner are unique. A term loan is a fixed amount of money that you will pay back during a specified period of time. So there's short term versus long term. A revolving loan is an arrangement to withdraw and repay a loan on an ongoing basis until the arrangement expires. Line of credit allows you to borrow up to a maximum amount of money and repay some of it and borrow more up to a maximum amount. It's very useful in retail businesses that need money to purchase inventory. You can repay the borrowed amount of money when you sell the inventory, and then you would need to borrow more to buy more inventory. So it's kind of like we said, it's kind of along the similar lines of a revolving loan. The basics of your loan request: how will you pay the money back? So how much you can afford to pay each month, that's the loan payment. How many months or years you will need to pay the loan back, so the maturity. And do you own anything of value, like real estate? That's the collateral that we were talking about before, that you can pledge to the lender to support the loan. How much is what you own worth? That's we're looking at collateral there. What is your company's financial condition? So can you pay all of your bills every month? Are you the person that's paying them on time? Are you late? So, and then a lender will review average collected balances. So seasonal financing for rural businesses, people that rely on events like during Bonumtok or Pyumbin and stuff like that. They can benefit from loan structures that are seasonal. Seasonal financing typically means a business pays smaller amounts in the off seasons and larger during the high seasons. So it's to accommodate when their income is highest. And then, tourism, agriculture, hospitality, outdoor sports, those things are sectors that would probably need the financial seasonal financing. So tracking your finances, your income statements, your taxes that you filed, and projections and assumptions. All these things are super duper important for you to get approved for a loan. You need to keep these records typically as far back as 2 years. Beyond that, it's kind of just icing on the cake. But you definitely want this information readily available so that when they ask for it, that you can share with them these things. So make sure you're tracking your you have your ledger all set up, you're tracking your bank statements, and you're filing that in a uh, secure manner. Filing taxes, obviously make sure if you don't have a CPA, get in contact with one so that you're properly filing, and then your income statement, make sure that you're following that, and then projection and assumptions. So this is all kind of goes in with also part of your business plan, and it's important that you track your finances. And some of the other key details when you're applying for a loan is make sure that you're aware of any unfair lending practices. So, um, for example, like blank spaces in documents, don't sign anywhere that there's a blank space. Make sure that if you have any doubts, don't sign it. Consult someone that's a trusted friend that works in finance or as a lawyer before you agree to any loan terms. Sometimes also in rural areas, they'll take advantage of people that because there's not a lot of business in the area, they'll kind of leverage it in a way that makes sense for the lender. So just make sure that you don't sign anything you don't feel trustworthy about. Think like a lender. These are some tips for achieving good credit readiness, is thinking like a lender. If your money is going to support someone else's dream, what would you want to know about that? What would you want to know about them? Good preparation. So you should be able to answer almost all the questions that they're asking you, and that goes into being prepared when you go into the room. Make sure that you have your business plan in front of you and that you're tracking your information readily. And you must also know your business plan. Like I said, the financial data is going to speak volumes on who you are rather than just your dreams, right? And then full disclosure is required. So address any situations in your business that might be kind of look suspicious or weak before they raise it, so that it doesn't look like you're trying to conceal something or concede. So, and then there's the extra little blurb down here. Just tell them your story and do it with enthusiasm so that they know that they're supporting someone that's passionate about what they want. The final few slides are just about getting approved for a loan. So it's going to recap on the main things they're really looking for. So where to start to get approved for a loan? The first step is to communicate with the bank about your business. So you want to make sure that you're contacting the correct person. You're speaking to the person that you need to be speaking to. You're in front of the person that's going to be helping you with this. What's the minimum criteria? So that's listed commonly on the website. You can go on there and click on. If you just type in, business loans and whatever bank or credit union you're looking at, they'll oftentimes list it, their requirements there. And if you don't have that information readily in front of you, you can always ask for help, and then you can speak with someone and get in contact with someone who can help you with that information. Oops, excuse me. Ask about loans and the bank, what the bank provides in those loans. Like I mentioned before, in rural settings, they're going to be a little bit different than so if you live in the country versus if you live in the city, there's going to be different kinds of options for people in those areas. And that's because there are different kinds of ways of doing business out there. And so just make sure you're, communicating to people that are going to be able to help your situation out. And the main takeaway is the only thing a potential lender knows about your business is the story you tell them. Also, what you need to know about non-traditional lenders. So there's some resources over here that I've provided to you guys. And one of those, as you guys can see, you see credit unions here, micro lenders, community-based lending programs, community advantage lenders that make loans under a special SBA business loan. So this is there's a lot of different ways you can get money other than using banks. Crowdfunding is another one that's not listed on here. You can do things like GoFundMe. We've all seen GoFundMe on there. We've also seen Kickstarters. That's another way to get funds from communities, and then reward-based services. So you kind of like fundraisers, things like that. Non-depository lenders, hedge funds, things like that. So on the right side under resources, you can see I listed BECU, that's a credit union, the SBA micro lender tool. We'll be talking about micro loans in just a second. CDC loan tool. So there's a lot of different tools over here. If you have questions regarding any one of these things, we can sit down and do a technical assistance, and we'd be happy to connect you with any one of these things. You can also click on that link and it'll take you directly to it. Microloans. So, for example, the Small Business Alliance program, it relies on community-based organizations to promote small loans to people who want to start to grow their small business. Usually the maximum loan is 50K and the average loan amount is 1,300, just over 13, as you can see there. Loan funds can be used for working capital, inventory, supplies, equipment, things that your business will need, right? Microlenders also, when they refinance for you the debt, it will improve the position and cash flow for you, which is kind of nice. So make sure that when it comes time for you to refinance, you talk to the microlender so that you can get a better rate and they can help improve your situation so that you can pay back better on time and you have more capital readily available to your disposal to put back into your business. Loan requirements vary from lender to lender, so just make sure you do a little bit of research so you can put yourself in the best position. And microlenders also help provide borrowers with basics. So if there's challenges during the loan, if you need a little bit of assistance, they can kind of hold your hand through it a little bit and help you through that. So non-traditional loans like microloans, they're a great way to get revenue. Themselves, they can take personal capital and invest it into the business. And just kind of tie things up about this presentation today. Now that we reviewed, credit and loan information, I want you to ask yourself these 5 questions. Do you need to review anything from this presentation about how to manage your credit? Number 2, which of these did you find most helpful? And do you have any steps in managing your credit that will help you applying for a business loan? Have any of these steps help you and getting closer to that? And do you feel better prepared to speak to a lender? And the last one is, what are some of the next actions you'll take for your small business to succeed that you learned in this module? So there's 5 questions, and I'm going to open it up for a floor discussion here. Any one of these 5.
Yeah, I would just want to say thank you. I'm at work, so I can't be too loud about it. That's why I'm on chat.
Well, thank you for taking the time for jumping in.
But yes, I want to say thank you very much for all the information you have provided. It gives me more, the tools and resources I need to move forward with opening a business.
Totally. Thank you for joining. We have a number of people we can tie you in with that are professionals in those areas. I'm kind of like, I play as the middle ground. I kind of connect people with resources. I'm not a business professional in all these areas. So I'm here to help give you access to these tools and these resources and then better connect you with professionals that can make you succeed more. So if you want to, if you have any of these areas that are like, that sounds like an area I need to improve on, contact me and I can get you directly in contact with somebody that can be able to help you out, especially if you're Khmer speaking. In our community, we have members that are professionals in these areas. I would love to get you in contact with these people so they can help you out and become a little bit more successful in your business. All right. And that concludes our presentation today. Thank you so much for taking your time to join us for an hour this morning on a Friday. And I hopefully will be talking to many of you soon. I'll be sending follow-up emails to get your feedback about how the presentation was. And if there's any one of these things that did stand out to you, if there's something we can do for you, I'd be happy to help you out. Thank you again, and have a great Friday.
Thank you, Ryan.
You're welcome. Thank you, Chai. Bye.
Thank you, Ryan.
Of course.
Thank you.
Bye.
Thank you,
Bye.
Ryan.